Another U.S. bank, First Republic, was closed on May the 1st, making it the third bank which went bankrupt this year, after the failure of Silicon Valley Bank and Signature Bank. What is more concerning, however, is that the U.S. Federal Reserve, often known as the Fed, which is the central bank, is also bankrupt. Despite the insight you need, I'm Jing. In today's episode, let's delve into this incident and see what the Fed's bankruptcy could mean to the U.S. and the world. On April the 18th, an article named "The Fed is Bankrupt" was published on America's mainstream news outlet, The Hill, written by Thomas Hagen, who is a senior research faculty member at the American Institute for Economic Research and former chief economist for the U.S. Senate Committee on Banking, Housing, and Urban Affairs. The Fed, which has the power to create money and regulate the supply of money in the economy, is generally regarded as a rock-solid institution. Data on the Fed's balance sheet show that the Fed owes the U.S. Treasury over $48 billion, which exceeds its total capital. Therefore, by common standard, the Fed is bankrupt. However, it doesn't go into legal bankruptcy like a private company would. Instead, it creates fictitious accounts on the asset side of its balance sheet, known as deferred assets, to offset its increasing liabilities. Deferred assets represent cash inflows the Fed expects in the future that will offset funds it owes the Treasury. After Silicon Valley Bank went bankrupt, the Fed declared that it would pay for the losses of the Silicon Valley Bank, which was eventually undertaken by taxpayers. Now, as the Fed struggles to make ends meet, the taxpayers will be shouldering even greater burden. And because the US dollar is a global currency, there will be spillover effects to the whole world, which means that other countries will also assume responsibilities for the mistakes made by the US government. Around the same time, Elon Musk commented in an interview on Fox News that the Fed should lower interest rates. However, the Fed has raised the rate 10 times consecutively since March last year, including an increase of 0.25 percentage point just several hours ago. To conclude this episode, let's listen to a warning from Elon Musk.
I think the last time the Fed raised rates going into a recession was 1929.
What happened next?
Yeah, the Great Depression.